Okay, let's look at a couple of ratios that will help us evaluate how well a merchandiser is doing. And one of those is gross profit percentage. This is very important for merchandisers and retailers, a very important key tool that they use. And the way we calculate that is by taking our gross profit and dividing it by our net sales revenue, and that gives us a gross profit percentage. And just as a reminder here, really quickly, remember the way that we calculate gross profit is you take your sales minus your cost of goods sold and that gives you gross profit percentage. And net sales revenue here is going to be your sales minus any sales discounts minus any sales returns and allowances. So sometimes you're given that information, sometimes you have to calculate it. If you have to calculate, at least you know how. Let's look at an example here really quickly. So here's some information for a particular company, and we need to calculate their gross profit percentage. So we know we need to take our gross profit. I'm going to abbreviate there real quickly. I'll write it in for you. Take our gross profit, divide it by our net sales revenue, and that gives us our gross profit percentage. Okay, so gross profit, do we have a line item up here that says gross profit? And we don't, so we're going to have to calculate that. We need to take our net sales revenue here and minus our cost of goods sold, just like we discussed a second ago. So we take 36,000 minus 19,000, and that's going to give us gross profit $17,000. And then we're going to divide that by our sales revenue, which we just said was 36,000. And that gives us a gross profit percentage of 47.22%. Okay, now, how do you interpret that information? So this tells us that for every dollar the company sells, that means they get 47.22 cents in gross profit. So if you're a small business owner, this means that for every dollar you sell to the customer, you get 47.22 cents to pay all of your other expenses. That's what this gross profit gives us. It's not money we get to put in our pocket and take home at night, but it's money that we get to use towards paying our utilities, paying our rent, paying our salaries, paying for our inventory, paying all of our bills, and ultimately at the end paying ourselves as well. Okay, before we finish up here, let's take a look at the net income percentage. This is another pretty key indicator. It tells us how much net income a company makes with the amount of sales that they actually have. So net income percentage, and in both cases, gross profit and net income percentage, a higher number would be better if you're going to be comparing two different companies. Okay, so let's go back and we'll look at our same, oops, that's not the right example. Okay, so this time we know we need to take our net income divided by our sales, and that's going to give us net income percentage. So this time let's take a look at what we actually have. We may have to calculate our net income because I don't think it's actually given to us. So we can take our gross profit from the last example. So I'm going to go ahead, we're going to have to calculate net income here. So we can take our gross profit, or we can calculate it again, which was our sales minus our cost of goods sold. I'll abbreviate COGS. And then I said that gives us our gross profit, and after that we have to subtract all of our other operating expenses. So we have, it looks like a rent expense of $100, interest expense of $400. Oh, excuse me there. Let me erase this one. That says prepaid rent. not rent expense. So the only other, looks like, expense that we have to pay is $400 for interest. So I'm going to go ahead and subtract that. That's along with, I should say, total operating expenses of $3,500. So that will include all of those other random expenses. And if we do that, we have sales of 36,000. Cost of goods sold was 19,000. Interest expense was 400. And our operating expenses were 3,500. So that gives us net income of $13,100. So let me come back up here. We'll go ahead and write that in, 13,100. We can divide that by our sales number, which was 36,000. And that gives us net income percentage of 36.39%. So this is a really cool number, and again, what does that actually mean? So if the business owner sells $1 in merchandise, or has $1 in sales, that translates to 36.39 cents in net income. Net income is monies that go back to the owners of the company. So if it's a sole proprietorship, that's 36 cents and 36.39 cents that the business owner gets to put in his pocket for every dollar he sells to a customer. That's a really good number to know, and it's very motivating to know how much of every sale we get to put in our pocket. Thank you.